Okay, guys, what's happening? SmartHelping.com here. Day 3 of live financial modeling on the new schedule. It's 10 a.m. Eastern. Today, we're going to continue on this three-statement model integration into the franchisor licensing model. Um, Before we get started, don't forget to subscribe to the channel if you want to join the stream. Support $5 a month. That's greatly appreciated. And most importantly, check out all financial models over at smarthelping.com. I've got all SaaS sector, real estate, accounting tools, industry specific templates, HR tools, lending models, and I've got discounts if you want to buy in bulk. And you can also get all the templates, or you can buy this by category and scroll on down here and check them all out. There's all kinds of stuff here. And if you use spreadsheets or need a startup model or need some kind of tracking for receivables, payables, inventory, you will find it here. Don't forget, with any purchase, you get the pitch deck ready financial visuals and the general three-statement model, which is what I'm actually using as a template to do all of this work right now for free with any purchase on the site. Or if you buy one of these for $45, you can get any other $45 template for free. Okay, enough of that. Let's get into what we're doing today. So first I need to get, so yesterday we did the income statement and some of the cap table and terminal value Capex stuff. What I want to do now is first, let's get, well, hold on. I want to do a sound check first, and I also want to check I need to check, I need to check the sound and check if I can do a different resolution on the screen so you guys can see more of it clearly. So hold on one second. Let's go to the live stream. Test. Okay, sound's working. Let's see, what can you guys see here? All the way over to column I. So I'm going to try and change the resolution. Let me do this. Let me try the DXGI. Is that any better? Let's see. Okay, that's the same. Okay, just hit one of the check. I wish it would go over more, but it's the issue with streaming on my TV. But it's okay. I'll put this back. And let's get started here. Um, let's so before here I was able to just do the income statement is pretty because that's mostly sourced from the data I've already gotten the monthly and annual P&L details. But the rest of the three-statement model, we're going to want to have our references all there in the position. So I'm going to go and paste this in. I'll paste each tab in. And this is, I mean, this is why people buy templates. Like I'm using my template to build this out in this template because, it's useful. Instead of trying to redo all the formatting, there's value there. And that's the whole point of using templates. So this is the monthly balance sheet. Get that in there. We'll have to adjust. I'll be doing all the reference adjustments and explaining what's going on here live. So just because I'm pasting it in doesn't mean you're going to miss anything. Have this in. And again, one thing that makes it easier to use is you got to, wherever you're importing this, you make sure you build the tab names out and make them the same as these tab names. That way, less confusing when you're updating the references. Balance sheet annual. And then we'll go cash flow statement, monthly, and we'll have to extend these all out for 10 years as well, instead of 5, because our model goes out for 10, which is fine. Last one, cash flow statement annual. Now, hopefully, this all goes nice and smooth. There's probably going to be some puzzle figuring out, and usually I've never worked on a balance sheet where everything just worked right away on the first try with all the formulas. Like it always takes some extra finesse. No matter, like I've literally done, I don't know, I've been working with financial statements and models since 2012 when I graduated, and there's always there's always a little bit of puzzle figuring out. So what I want to do now before we get into any complex stuff is let's reference the top names, and let's update this, and we're going to update the for the full 10 years for each of these. I do like so going from streaming once a week to 5 days a week. I actually like it because I do have the time and I want to work on this stuff. It's fun to work on. So, and it's exciting to build this out. I'm really like integrating a three statement model into all the SaaS and all the industry specific templates, which is what we're going to be doing on stream for the majority of the time for the next 9 months. um, it's it's fun to do and it's increasing the value of everything that I have on this site. Sorry about that. I'm still a little recovered from the flu, COVID, whatever. It's just it's been a process, I'll tell you that. Drag this over. Okay, so ah, I'm gonna have to reference actually a different metric here. So this or a different cell. So this we're gonna go to the start month here, and then this is the exit. There we go. Yeah. Okay. Just get this thing set up here. So all of this needs to go, all these references to the other workbook. Okay, that's good. Adjust this. I don't know why I decided to make like the cells go blank if it was after the exit month and just instead of just having them be there and zeroed out with the data. What's going on here? What's C7? Uh, okay, so C7 here. Oh, okay, that sounds better. C5. And you'll find whenever you're doing three-statement modeling, you work in like you do some partial of one thing, then that gets the other thing, then you can do the other. Now, by bringing in a template, you have all the references. You just have to update references and make sure the positioning is the same, and it's quite a bit easier than doing it from scratch. Okay, what is going on here? If D5, what is, okay, this can just reference R and this. Uh, oh, right. Right. So this has to be actual a date reference. Uh, oh, for goodness sakes. Okay, hold on. Let's grab this back over here. So that's in E5. So if you're control and this is supposed to be C5. All right. So 1, 2, we got to go out 10 years. 1, 2, 3, 4. And then all of these formulas will have to be updated. Just I'll just drag them over for now. Okay, that's fine. I just want to make sure first that our dates and stuff are all formatted. And when you're making like a public facing program, it's very important that there's not errors. So you got to go kind of top down, make sure, especially when you're pasting in data from other workbooks, you got to really be careful. Now this can simply, we don't need any of this formula here. We already have all the monthly logic in the income statement, so we can just hard code reference that, and that's completely fine. Because it's all the same timeline. all the way over to month 120. Now, wind this up. Month ended. So this start month has to reference our validation date, and then this is going up to C5. Reference that. Also get, it's honestly on my TV, I can barely see the grid lines that it is, but I know on the computer you really can see them. So get rid of those. So it looks cleaner. Widen this up a bit. We'll do, I think, what do we do, 12 on these? Let me check on the monthly income statement. 15, okay. Always want to be consistent with formatting. Statement of cash flows is good. We'll go to the balance sheet. Now this, we're just gonna literally reference exactly what's going on the annual here. No need for any more complexity. Now balance sheet, okay, our start month. We got some nice text formatting in this formula. Oh shoot, forgot that apostrophe. Update the naming. We'll lock. What do we want to lock? What did I lock on the main one? Just the date part. Okay. Yeah, just lock the date on that. Let's update this freeze. Just the date, just the date. Okay, so we got that in there. I'll go through and double check all this after we're done formatting. Let's just drag this over. Monthly balance sheet. Almost done with this formatting. Just reference that in there. Take out the grid lines. Reference the date. Start month, end month. Oh, almost forgot that apostrophe again. Reference the title of the company. Okay, that all, I'm just double checking I did that for these. And then finally, the income statement annual. Nope, come on. Now, when, oh, what is going on here? Let me just pull this down. Okay, here we go. Now we can start on some formulas. Dang it, I forgot the apostrophe on that one. Okay, so let's think about what's the most logical place to start. And again, let's get these formatted right. It's 15. Income statement annual probably makes sense. We just sum ifs the monthly. And then we'll get into some fun. Sorry, I'm just responding to some emails. Um, yeah, I think we'll go income statement first, and then we'll move on to it. Well, it'll get fun because there's gonna be different things that are gonna affect the balance sheet and cash flow. We're gonna have to talk through that to make sure we're making sense. And then at the end of the day, we should be able to reconcile what's going on in the balance sheet, in the cash flow statement, with what we have going on in the monthly and annual um, P&L details that were already done. Because that has to match because it's the same numbers. It's just this is a different format that's more formalized. Just about done sending this email out. Okay. Now, let's go. We might as well do this. Get it all nice and formatted. Oh, this isn't even drug over for 120 months. Let's get that all done so that all we have to do after that is just work on the logic. If you're thinking about getting into financial modeling as a career, I love it. This is the kind of stuff you're going to be doing. and it's definitely worth learning a lot of Excel stuff too. You'll just be better at doing the modeling. But it is tedious if you like puzzles, if you're okay at math, and you're good at logic, then this is for you. And obviously there's plenty of money to be had. Everybody needs this stuff done. 15. Just make sure this is going out all the way. Oh, we're missing the last month on this. Put that in. But you really got to be good with fine detail. You need to be kind of really consistent with how you build stuff. And you'll see when I start doing other updates to templates, you're going to see the difference in my modeling from 5 years ago versus now, because it's definitely changed as we go through this process. All right, that's, double check 120. Yep, that's good. Okay. So, and obviously some of this income statement is not done yet, but it can't be done until we do other areas. So we'll have to remember that to come back and check it. So if all I really want to keep here is that, and then I'm just going to go sum ifs on the annual or monthly. And the easiest way is to reference the year if the year matches the year. So that's row 3. Checking to see if that matches our year right there. That's it. We'll have to lock the row 3 reference and the year reference here. C4. I always try, if there's ever a reference on the same tab, I always try to make a habit of removing that, so it's not saying income statement annual cell C4, it's just saying cell C4. But if you're referencing other tab data on other tabs, that you have to have it because the program needs to know what tab to go to if you're doing that. And for this particular template, I'm going to clean up rows and stuff of unused rows after we finish doing all the after it's done. So for now, it can just stay 0. Just doing some referencing here, and now we can just copy and paste this down because we locked all the right stuff. Now, if you're a viewer and you have questions, I will answer them here and go back and forth with you on at whatever, um, as it relates to whatever I'm building at the time. Or if you have comments, I respond to all comments. Feel free to let me know what you're thinking, or if you have suggestions on things or past template suggestions on customizations that you think are good to have. The whole reason why I've been able to do this is because I realized I have a lot of time in the morning that I want to spend streaming. And one thing I know I need to do is upgrade all of these templates. I'd say there's probably 50 startup models that are going to be applicable to this. And they can all use this 3-statement model. So I figured I could stream every day and show that being done, and that's some good content. That's completely what I do anyway, so it's complimentary. And hopefully you guys can learn some stuff, see how some of this stuff's done, benefit in some way, and obviously it'll help me with more traffic and just general audience retention, I'm hoping. Now remember, there's a lot of extra spaces here. I just did the totals for sales, marketing, general, administrative, research, development, and startup costs as their totals. If someone were to view this and want to see the detail, they can always go to the monthly detail and just view all the different OPEX items that are making up these totals. And there's even an executive summary that does it at a high level with the percentages of revenue for each of those. And let me put some debt in here just to see, just to make sure all that's working. So you get a $250,000 loan. Okay, good, that's coming through there. It'll be more important on the balance sheet, but just make sure that data's coming in. Okay, depreciation. Same thing, we're just going to pull that right from the income statement, and that is actually pulling from our Capex schedule that we put in yesterday. And these can all be copy and pasted in. And the net gain and loss on the sale of like fixed assets and stuff is referencing in the monthly, it's referencing what's going to be in the balance sheet, and that's not filled out yet for the full 10 years. So we'll have to check that once we do the other sheets. Okay, so this taxable income. We can also sum up from the monthly. Hold on a sec. What? And if the year is negative, then there's no taxes. Let's see how I did the income tax exactly. Oh wait, monthly 96. This is always a little tricky doing tax stuff. So 96 is 0. This is summing up income statement annual 95. So it's taking taxable income only if it's greater than 0. Oh, and I have some logic here I gotta add. And I knew that there was something there. Okay, so we have actually, we need to go all the way to 106. Apparently I had, let's go back to our base template. Income statement monthly. Yes, so this is what I didn't have in here because I didn't see it. So we gotta get this. This is basically saying the active months in each period, which is only relevant if it's needed if you have a month that is, like if you end the model on a half month or a half year or something. Otherwise, you can just take the whole amount and assume it's active for the whole year for every year that has data. Okay. So let's check the math here. So C5 date. Okay, that's fine. So it's saying if the date is greater than our I believe C5 on the other template was the start month, which we can do as this. And if it's less, if the current date is less than, and that's the end month. Then do 1, otherwise 0. So it's basically saying if it's in between the start and end month, put a 1, otherwise nothing. Oh, I forgot the apostrophe in there. And you'll see why this is relevant. Let's drag this all the way down over. So see here we have the model is ending in November, so it's going to count only 11 months active in the final year, and that's going to affect the taxes per month. So it's accurate. And for now, I want to actually put this back to the full end just while we're updating all these to make sure it's flowing all the way through. So where were we here? This needs updated. So this is summing up. Let's keep all this in here and just remove the workbook reference. So that's 0, right? Because it's a net loss. Net income is negative. Then it goes from there. Now the question is, if we did this right, we can check. Oh, hold on, we got another. What's this pulling from? C7. Hold on, let's see what this is actually referencing. There's some tricky stuff going on with the net income and the terminal value and the tax and all that stuff, so I got to make sure what I was thinking here. So Control C6 on this model was the end month. Okay. So on our model, that's C5. So this is saying if it's the what the heck am I doing here? If the year of C5 equals the end month, then pull Capex J20. So that'll be the confused a little bit. Okay, let's go to Capex J20. I'm assuming that is okay. Got it. So what that is doing is saying if there's a negative value, so if whatever the total, if you have the sale of business and the amount of the sales proceeds allocated to fixed assets is less than the cost basis of them, it results in a net loss on the book value, which we're going to have. So all these, this is not, we haven't updated the balance sheet yet, so these numbers aren't right. But it's basically bringing in the net loss into the net income. Yeah. And I'm trying to think here for a second. So that flows to net income. And this is, I mean, the balance sheet stuff, this is where stuff gets real complicated. So let's see here. So depreciation. What's in row 90? Nothing. Let me go into here and see. Make sure I didn't mess up a reference when I pulled in the formulas. C90 must have been something that got removed because there's blank on this too. Okay. So looking at it with the actual date in here, sorry, I can tell we're not doing taxable income less income taxes to get to this net income. We're doing EBITDA less interest less depreciation plus income and plus net gain or loss from the sale of assets minus taxes. And then if it's the end, if if year of here equals C7, then pull now year of C7. Ah, okay, this makes more sense. So here I actually had an end year Okay, that makes sense. I don't have that on my current, and that's why it was not making sense to me. And that's why on the monthly, it just references if this date equals C6, and then the income statement, it checks if the year matches. Okay, so we got to go back over here and put an end year on the control because we don't really have one. And this is fine. I think we can insert a row here. There's nothing, the references aren't going to get messed up. So we'll just manually put in end year, which is just the year of this. And yeah, we got to remove the validation. Equals year of exit. And if it's NA, we'll just do a if error. And blank. Okay, now you'll see, now it'll make sense. Before it wasn't making sense to me because there was no year calculation on the control tab. All right, so that's in C6. Let's go back over to our annual income statement. C6. Yeah, and there we have, that's a different number. 217. Let's go back over to here, make sure this, okay, then that makes, so let's do a check here. So sum of all of this minus sum of all this should equal 0. And perfect. So if the net income matches, that means all of the information has to match on all of this, so that's good. Going back to this Capex, so this is adding, I want to understand what we're doing here. So this is adding, what are the annuals? Easier to see it. There's 1.54 million here in gains. If I go over to our Capex, so that's this number. So it's saying the part of the sale that was allocated to fixed assets for each of these assets was this amount, this row or column. Here's the book value, which is based on depreciation, and the value at the exit month of the asset after accounting for what it cost and then depreciating it. And then if there's a gain or loss, that goes here and it's taxed differently. So that 1.5 million is part of this gain. Let's go over and look at the monthly so you can see the actual calculation. So this is only pulling valuation D9, which if we go over to D9 is the value after accounting for the percentage of extra income. So it's only including, so total extra value is 900,000 in this case. 810 goes there and 90 goes to the other fixed assets. So you have 810 here. Net gain loss. This is including the other 10%, whatever it was, as well as the building sale. Now, if we were to say the building, if we go over to our Capex, if we were to say there was no building, zero this out, then you see this total here is 864, 232. And if you go over to the Capex, or sorry, not the Capex, if you go over to the valuation, we're at 900. So let me think. So this is tax at the regular. So we've got 810 coming through, and then remaining is 90. Let's go back to this this calculation here. So if that equals this, sum Capex J13 to 18. So Capex 13 to 18 in column J. Wait a second. What? 3 to 18, not 13. Double check this. Yeah, 3 to 18. So summing up all those gains, 54. I just want to make sure. Okay. So this is showing the gain, not the total value at sale. So if you look at the total value at sale, it's 90,010, which is what you see on the valuation. It's this remaining amount. So on the income statement, we're just looking at the net gain or loss. When we go over to the cash, sorry. When we go over to the cash flow statement, we just want to see the total value of the cash coming in. Because this is taxable, not the whole amount. Just the net gain or loss if there's net gain. So that's why only this is the gain. And when you go over to taxable income, we're just doing the extraordinary income of the business. So that is taxed differently. So when you go over, oh yeah, so this is a complicated formula. So when you go to actually what's taxable, we have to go over to the annual. And you can see this sums up the annual amount, but then it also sums up row 93 here, which is a net gain or loss from this here. So to figure out the taxes, we're looking at the total. It's looking at the total annual income taxes, or taxable income, sorry, if it's greater than 0, and if there's a net gain or loss, and that's going at a different tax rate, which is Control C10. So that's what's going on here, and that's what to get a more accurate financial forecast, you got to go through all that logic, and then it's dividing it by the amount of active months, which is this, to get the right number. Okay, so we know how that's what's going on there. Let's go back to our franchisor licensing model and make sure, now that we understand exactly what's going on, let's make sure it's working right. Let's start with the monthly. So that's taking this one, that, and then summing up income statement 95. That looks good. 95 is taxable income. And then this sums up. Okay. So you can see how you got to go back and forth between the two to get, so there's no circular reference errors and it does the right calculation. Now, the last piece of this, let me think here. Why are we adding back that net gain or loss if there is one? Let's go back here to our base template. Let me scroll over so you guys can see the oh shoot, I realize you guys can't even see this last column before. So this 54 is the net gain. The net gain to figure out. Okay. So because I got it. So this 54 is not flowing to taxable income. So like I was saying originally, it's this 54 is part of taxable income, but we haven't counted it in this. So to get the actual net income, we got to count both of these as income portions. So that's why it's added here. And then we're not starting with taxable income as a reference. We're starting up the line at EBITDA and then working our way down. And so since we haven't counted the 54,000 here, we have to, because we're not just doing row 95 minus row 96. We have to calculate the stuff above and then subtract the taxes to get net income. Okay, so that all makes sense, and I know it does because I spent so much time building this out originally, and I know it was accurate, and there was a lot of effort to make sure this was right. Um, so that makes sense. So that's why we're taking this amount because it is income and we haven't counted it. It has to be part of net income because it's net profit less from the sale. But we have to separate it out because it's got a different tax rate. Okay. So this is vetted pretty good. Our numbers match for the monthly and the annual. We still have to do other schedules to get all of the data here, especially this fixed asset stuff. So let's go to the balance sheet. And this is where the fun really begins. Balance sheet's the hardest part of this whole process. So first off, we start with cash. So we're doing current assets. I just have cash and inventory. Inventory is going to be irrelevant for this template, so we don't need it. It's just a franchisor or licensee, so they're just collecting fees. They don't really hold any inventory. So all I want is cash flow statement. Okay, so so see how we got to go from statement to statement. So in the cash flow statement is not done yet. I want to do the balance sheet. We're going to try and do this balance sheet. I guess. Well, let's go. So cash flow statement monthly. Let's go to that real quick. Okay, so this is all the different things. So customer receipts, which is high level revenue. Oop, let me get rid of the apostrophe. What income statement monthly? Why is it saying I don't have that? MONTHLY. Am I crazy or is that the same? Oh, duh. We need to put our apostrophes for if there's spacing. All right, so revenue. This is your top line revenue income statement C11, which is right there. We'll just drag this over a little bit for now. We have Payments for good. So here is where if you had inventory, you might be buying inventory every 3 months, but the cost of goods sold is going to happen when the thing sells. So this is to reconcile that, you have to show it on the cash flow from operating activities as a number. We don't, this is just going to be 0. Actually, the reference is not even going to be there. I'm going to keep this in though, in case you want to see how it would work in theory. Actually, no, because we don't even have an inventory tab. Because I didn't bring it over because there's no inventory in this type of business. So there will be for other ones, but for this one we don't need it. So let's just 0 this out. Essentially, it's just showing the purchase schedule of when that cash goes out, and it'll be reconciled against cost of goods sold. But we don't need that in here because it's not other. Let's see. So this is, why did I put other operating expenses? That would be all operating expenses. Let's go back to our base here real quick. So on this cash flow, this is $63, $15, and $16. Okay, so 63. Okay, so it's everything except for the inventory row, all the expenses. Now, since we don't have inventory, we don't have to worry about that, so we can just actually sum up our OPEX as, let's just get rid of all this. It's going to be negative, and we put it into variable cost because there's not really cost of goods sold in this. It's more of a variable versus fixed cost. So we have this minus all of these costs here. And trust me, was the whole thing with a 3 statement model is you get all the checks when you start um, doing all these different calculations, and it will not balance if you haven't done it right. So it's very good at preventing double counting. I'm just going to keep this blank for now. At the end, once I have all the model done, I'll remove and format the extra spaces that we never used. So interest is definitely one we'll take in here. And then taxes definitely included. So that's basically all the cash items in the correct period that they happen. Total revenue, expense less expenses, taxes, and interest. So you have net cash flow from operating activities. Then we go to Capex. So, and see, this is why I save the names. I don't got to redo this formula. We're just summing up the Capex expenditures if the month matches the month in here. And it will tie to that and depreciation and book value, all that stuff. And this is reference to its own cell, so we'll take out that. So Capex Oh shoot, did I drag all these over? Let me double check. Yeah. Okay, good. So Capex, let's just get all these. So this is fine. Now here we change the name of this, so we got to update it to terminal value instead of valuation. I believe in terminal value D9. Yeah, total amount. Perfect. So again, for the three statement model, I like to start with the income statement monthly. And you could do all the monthlies before the annual. The annuals are just aggregate. The monthlies are really what matters. So income statement monthly, and then cash flow statement, and then balance sheet, I think is the best order. And you still got some things that are interdependent, but for me, I feel like that's the best order. Oh, it's already 11 o'clock, 11:07. We're still going. I definitely want to get further on this, so we're going to be going here a bit. All right. And then sale of depreciable assets. So this is, in order to balance correctly, I have to separate out the business part, which is extraordinary income, versus the amount for assets, for fixed assets, and the building. So in order to do this, we are checking number one, well, if the month we're looking at is the exit month or not. And if it is, the formula is going to pull the terminal value, cell D6, if it's greater than 0, and terminal value D10 plus Capex H3, which is, I think that's the sale of the building, if I had to guess. So we're looking at terminal value, D6 and 10, and Capex H3. So let's see what those are. D10 is the amount remaining, or amount applied to fixed assets. And H3, yeah, the value of the building that's at sale. So we're taking this, and then we're taking, wait, let's double check. What did I say? Hold on, let's see. I forgot what I said actually. Terminal value D6 and 10. Only if terminal value D6 is greater than 0. Then pull terminal value D10, which D10 is, okay, so that's if it's a positive, um, if there's a positive gain on the fixed assets. And then we're adding the sale of the building, the total value of that sale. And again, so so this is not the net profit. This is the total cash coming in. D10 is total cash coming in. And H3, that's the total value coming in, not the net profit. That's important. On the income statement, we look at just the profit. Cash flow statement, we're looking on these as the total cash coming in. And then the taxes we're paying are going to offset that to get the, so, and that's how kind of it'll flow over and balance out. Now this is 0. Oh, because it's not updated with the depreciable. It's got all the stuff from the other workbook still, so we'll have to come back and check that after we finish with the balance sheet. So we got cash flow from investing activities, operating activities, and then financing activities. And trust me, it gets very murky sometimes in what you classify stuff as versus financing versus investing. Operating is pretty straightforward, but um, it can get real tricky. Let's look at this though. So we want to look at all the debt service here. So we're going to take the principal payments, and what do I have? Why did we sum? Okay, so that's just cumbersome to sum that up. We can just do negative and just take the principal off the. Oh, I know why. Because in the base three statement model, we don't have a monthly and annual P&L detail. It's just the three statements and a debt schedule. So here, but here it's nice and easy. I can just reference the principal payment without doing a sum if formula. So there's principal. And again, that's because on our income statement, we only look at the interest. So here we're looking at the principal, and then the interest and all that's going to be kind of when we do our reconciliation up to the top here. You can see there's the interest. So everything will balance out. Oh shoot, I didn't even realize. So borrowing long-term debts, I was wondering that didn't look like a title. It's not. So we got to update this formula too. And we do need to reference our debt amortization, which is, I think B7 is the date. We'll check here in a second. And this is just pulling in the debt proceeds, I believe. B7 and B3. Why did I check if D11 is blank? Go over here. What's D11? Payment. Why did we reference that in here? I guess just we were just looking at if anything is blank. Oh yeah, because these are all if blanks. That's fine. So that's gonna be blank because it's not even gonna be used. It'll always be blank. So let's change this just to do. Uh, we'll just reference the date. So here we're saying we're borrowing 250, so that's cash coming in. Drag this over. And it'll just be coming in that 1 month. Then we've got the principal. This we're gonna get into later. So common stock and like on the main three statement model, I tried to do something where we're showing if dividends are paid out or not. In this, and I'll have to think about this more, but I'm pretty sure the way I want to do it in all of these startup models is there's going to be no distribution of dividends. It's just going to increase um, cash of the business. And obviously the equity, you'll see the equity in the percentage that everyone has, which they essentially you can see their claim to whatever the retained earnings is, um, or their claim to um, on the balance sheet, their claim to the uh, owner's equity. So I'm not gonna get into dividend disbursements. I don't think it's relevant. We're gonna see that in the distribution schedule if it were to be distributed, but for the three statement model, for the purpose of that, it's just gonna accumulate into equity. Um, Sale of company stock. What the heck was I doing there? Okay, so that's if they sold. That's if an investor sold in their basically cashing out. We're not gonna do that either in this because it's just two variables. It's not like there's not much value in putting that stuff in here. We just want to know what is the total equity amount and what's the share each investor has of that in terms of looking at a balance sheet and income statement and cash flow statement. Okay, so these, make sure these are all going over. Now, where on here is debt repayment? Because, yeah, we're not going to have to worry about any of this stuff. We borrowed 250. What if our exit month was, let's say, well, let's say it's December 2024. The loan term is 30 years. So what did we do? I can't remember how we accounted for that. Sale of business. Oh, did we do it in the valuation? No. So, and it has to balance out somehow. Just seeing where would I put that? Let's look at the balance sheet. This is saying no long-term debt. Okay, so where did it zero out at? Here. Why? What happened in August of 2022? Let's go to the debt schedule. Oh, okay. Oh, I did a payoff month logic. So, and that principal just comes, oh, okay, I see. And if you look at the cash flow statement monthly, on that date, the principal payment is just going to be a big number. So there's principal is low, 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 and then you can see that month there's the cash to pay it back. Okay, so that's fine. I was wondering how I did that in that model. So it will be part of the principal payment. I need to add that in. I put this in yellow. Add logic and debt schedule for repayment month. And you can assume it's probably going to be the exit month when all those proceeds are available, but it might not be. It could be any month. So you can either put it at the last month of the model and it'll pay back on the exit, or you can put it some months in the future and you can see if you have enough cash to pay it back based on all the other activities. It'll show you with a negative cash balance. You'll be able to see that in the balance sheet if you didn't have enough money to pay it back. So we'll have to update that debt schedule with an exit month right here. We'll add exit month or payback month, and then that'll just stop the schedule and come into principal, which flows to the rest of the model fine. Put that reminder here too. I'm not going to do it right now. I'll do it tomorrow probably on the stream. Add principal, add payback month. Okay, so that's good. What else is going on here? Well, I guess that's everything. Net change in cash. Now, in theory, so this supplemental schedule, we do have a cap table that already does all of this. So this is not really needed. This is just showing the percentage share of everybody. We don't need that because we have, if you want to look at the cap table, we've already done all of this. So like common shares, different classes, equity contributed by founders versus outside investors, um, and their fully diluted share amount, percentage, and I did annual distributions for them as well for each row. And honestly, this should probably be a frozen. Probably should freeze this right here. So then as you scroll over, you can see like who is getting these distributions on the left side. So we already have that. Now I'm trying to see if I'll probably just do outside investors equity and insiders equity when I go to the balance sheet and do that. It'll just be, I'm not going to show every single little one on the balance sheet, but it'll just be an aggregate from this. Well, that's pretty good. We got through the income statement annual. We got through some logic today. Got through the cash flow statement. We updated, got all the different statements into here and formatted. So I believe tomorrow, I think this should be done. I think I could finish a cash flow statement annual and the balance sheet, and we'll be good to go. And then this franchisor licensing I'm going to put up for sale, I'm only charging $45. I feel like that's the value here is insane for that price, but it's going to be $45 template. And then so we'll finish tomorrow. What's tomorrow? Thursday. And then Friday we'll start on the most popular template I've ever sold. I think I sold 150 or so copies of the SaaS startup model. And so I'm going to put in a cap table and three statement model into that based on all this logic. It's going to look like really cool. And that really is, it's my most sold template and top earning template. So upgrading it with that is going to be cool. I'll probably do an overview video of it once it's done. Well, I'm gonna do overview videos of all these once they're done, like a 5 or 10 minute that shows like the three statement models was updated for X, Y, and Z templates. But that'll be hopefully Friday, and we'll start on that Friday. And that's gonna be like I paste in all these different tabs reformat it, and then start referencing. It's a lot of it's grind work, but um, I think it's really gonna help the value of all these templates. So that'll be Friday. And I think I'm done now for today. Left off on cash flow. Yeah, we'll keep going tomorrow. I will. Oh yeah, Friday might be a longer stream because my wife's going to her mom's, I believe, for the morning, or not to her sister's. So, and then what are we doing after that? I don't know. Friday might be a longer stream. I'll see how far I can get with the SaaS model. There'll also be the SaaS model. I might do some other upgrades while I'm in there. I don't know. But no, all these updates, all the like the cap table and the three statement modeling is all additional statements in reports. I'm not taking anything away from what's already in all these templates. I'm just adding um, reports that are based on the data that's there. Let's see. So remember to add in logic for repayment months for debt, and then we'll start on the balance sheet, and then we'll just start doing checks on everything. All right. Don't forget, check out smarthelping.com for all your financial modeling needs. I'll see you guys tomorrow, and I do really enjoy doing this every day. This is a nice. I like the pace, hour and a half, 2 hours. You guys can kind of keep up better than doing once a week. So, yep, this is fun. All right, guys, take it easy.